Did you know that if you invested just $1,000 in Warren Buffett's company, Berkshire Hathaway, in 1965, it would be worth over $27 million today? That's the power of Buffett's investing strategies. But here's the catch. Most people never learn the real secrets behind his success. In this video, we're diving into the timeless principles that made Buffett one of the richest people in the world. You'll discover how to spot undervalued stocks, why patience is your best investment tool, and how to think like a true value investor. But there's more. Buffett's genius isn't just about buying great companies. It's about building the right mindset, the right habits, and preparing yourself for long-term wealth. So, if you're ready to start your own investing journey or take it to the next level, keep watching. It's time to learn how to think, act, and invest like the Oracle of Omaha himself. Get ready, because your path to financial freedom starts now. Chapter 1. The Mindset of a Master Investor. Think like Buffett. Warren Buffett is known for more than just his investment skills. His mindset has been the secret to his success. Buffett has often said, the most important quality for an investor is temperament, not intellect. What does this mean? It's simple. Patience and emotional control matter more than intelligence in investing. When the stock market crashes, the smart investor remains calm while others panic. For Buffett, this means ignoring short-term noise and focusing on long-term goals. This mindset of patience and calmness leads to making better decisions. Instead of buying when everyone else is excited, Buffett buys when others are fearful. He calls this strategy, being greedy when others are fearful and fearful when others are greedy. It's a mindset shift, seeing market drops as opportunities, not threats. In fact, Buffett's net worth grew at an average annual rate of 20.3% between 1965 and 2020. That's nearly double the S&P 500's return. His secret? Sticking to his principles and not getting swept up in short-term market trends. Most investors panic when stocks dip, but Buffett simply waits. He knows that success doesn't come from trying to time the market. It comes from sticking to solid investments for the long haul. One interesting fact. Buffett bought Coca-Cola stock in 1988 and still holds it today. That's 36 years of unwavering belief in a business he understands. Buffett's approach teaches us that it's crucial to develop your own investor's temperament. The markets will test your emotions, don't let them win. Chapter 2. The Power of Patience. How waiting can make you rich. If you want to be a successful investor, patience is your best friend. Warren Buffett has repeatedly emphasized that the key to building wealth lies in time, not timing. His rule is simple. Our favorite holding period is forever. While many traders are focused on making quick profits, Buffett looks for investments he can hold indefinitely. Why? Because the magic of compound interest works best when you allow your investments to grow over time. Take a look at one of Buffett's most famous investments, See's Candies. He bought the company in 1972 for $25 million. Today, that investment is worth billions. By holding on to his investments and letting them grow, Buffett has created massive wealth. But patience doesn't just mean waiting, it means understanding the businesses you invest in. Buffett says, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. This is the core of his investment philosophy. Focus on high-quality businesses and let them grow over the long term. Here's an interesting statistic. A $1,000 investment in Berkshire Hathaway stock, Buffett's company, in 1965 would be worth over $27 million today. That's the power of patience and compound returns. The key takeaway here? Don't rush your investments. Pick strong businesses, hold on to them, and let the magic of time work for you. The longer you stay invested, the more you'll see your money grow. Chapter 3. The Secret Ingredient. Finding your circle of competence. Another crucial aspect of Buffett's success is his focus on his circle of competence. Simply put, this means investing in what you know. Buffett has famously stated, you don't have to be a genius, you just have to understand what you're doing. Buffett's circle of competence includes businesses he understands deeply. For example, he didn't invest in technology companies for many years because he didn't understand them. Instead, he focused on consumer goods, insurance, and energy, areas he knew well. By sticking to what he understands, he avoids the risk of investing in businesses outside his expertise. This doesn't mean you can't expand your circle. Buffett once said, "The more you learn, the more you earn." But it does mean that you should be honest with yourself about what you know and stay within your lane. Investors often make the mistake of chasing trends, investing in areas they don't fully understand. This can lead to costly mistakes. To give you an example, when Buffett bought Geico in 1976, it was a company he knew well because he understood the insurance business. He took the time to understand how it worked before making the investment, which led to huge returns. Geico is now one of Berkshire Hathaway's biggest success stories. Understanding your circle of competence helps you avoid risk. Buffett recommends focusing on industries where you can easily understand the numbers, the business model, and the long-term prospects. This is the foundation of making smart, low-risk investments. Interestingly, research supports this idea. Studies show that investors who stick to industries they know tend to outperform those who diversify too broadly. This approach lowers the chances of making poor decisions and boosts long-term returns. The lesson here? Focus on businesses and industries you understand. The more you know about a company, the better equipped you are to make sound investment decisions. And if you don't understand something, don't be afraid to leave it alone. Don't forget to subscribe to the channel for more insights on how to think and invest like Warren Buffett. If you're enjoying this breakdown, hit the bell icon so you never miss out on more valuable tips that could change the way you invest. Chapter 4. Undervalued Gold. How to spot hidden investment gems. One of Warren Buffett's greatest strengths is his ability to find undervalued stocks, companies that are being sold for less than they're really worth. Buffett calls this strategy value investing, and it's a core principle of his investment philosophy. He said, "Price is what you pay. Value is what you get." This means that the price of a stock is not always a true reflection of its worth. To find these hidden gems, Buffett looks for businesses with strong fundamentals, like consistent earnings, a solid brand, and a competitive advantage. Take his investment in American Express during the 1960s. At the time, the company was struggling, but Buffett recognized its potential. By investing when others were skeptical, Buffett turned a $1 million investment into billions. But how can you spot undervalued companies yourself? Start by looking at financial ratios, such as the price-to-earnings (P/E) ratio and price-to-book (P/B) ratio. These can help you identify stocks that are trading for less than their intrinsic value. Additionally, Buffett looks for businesses with a moat, a unique advantage that protects them from competitors. For instance, Coca-Cola's brand and global recognition give it a strong moat, which is why Buffett bought the stock in the 1980s and still holds it today. A key statistic to remember, from 1965 to 2020, Buffett's company, Berkshire Hathaway, outperformed the S&P 500 by nearly 2,800%. This wasn't luck. It was the result of buying undervalued companies with strong potential. Remember, spotting undervalued stocks requires patience and research. It's not about jumping on the latest hot stock, but rather identifying businesses that have long-term growth potential, even when the market doesn't see it yet. So, start thinking like Buffett and look for companies that are trading below their true worth. With time, those undervalued investments can turn into gold. Chapter 5. Investing in yourself. The ultimate long-term strategy. Warren Buffett believes that the best investment you can make is in yourself. He said, "The best thing you can do is to invest in yourself." This doesn't just mean learning about the stock market. It means developing the skills, mindset, and habits that will help you succeed in life and investing. Buffett himself has always prioritized learning. He reads around 500 pages a day, covering everything from business and economics to history. The more you know, the better decisions you can make, whether in investing or other areas of life. In fact, Buffett attributes much of his success to his lifelong love of reading and learning. Investing in yourself also means developing the emotional discipline needed to be a successful investor. Buffett has famously said, "Wealth is the transfer of money from the impatient to the patient." Cultivating patience and emotional control can help you avoid making rash decisions when markets are volatile. But self-investment isn't just about knowledge, it's also about building a strong personal foundation. Buffett often talks about how important it is to maintain a good reputation. He says, "It takes 20 years to build a reputation and 5 minutes to ruin it." Maintaining integrity and trust is essential in both business and personal relationships. One interesting piece of data, research by the World Economic Forum shows that investing in your skills and education leads to higher earnings. People with higher levels of education tend to earn more over their lifetime. So, think of every book you read, every course you take, and every skill you develop as a way to increase your personal value. In the world of investing, your ability to make sound decisions, stay patient, and maintain a positive outlook is one of your greatest assets. The better you invest in yourself, the more success you'll find in the market and in life. Chapter 6. The Buffett Blueprint. Turning challenges into opportunities. Warren Buffett is no stranger to challenges. In fact, he's often said, "You can't make a good deal with a bad person." But instead of avoiding challenges, Buffett sees them as opportunities. One of his most famous quotes is, "The stock market is filled with individuals who know the price of everything, but the value of nothing." Buffett's ability to turn challenges into opportunities can be seen in many of his most successful investments. For example, during the 2008 financial crisis, many investors were selling off their stocks in fear. But Buffett saw an opportunity. He made major investments in companies like Goldman Sachs and General Electric when their stock prices were low. These investments paid off handsomely once the market recovered. It's not just about buying low and selling high, it's about having the courage to invest when others are too fearful. This mindset has helped Buffett build a fortune that's now worth over $100 billion. During the crisis, he famously said, "Be fearful when others are greedy and greedy when others are fearful." This is a classic example of turning market challenges into opportunities. Another part of Buffett's blueprint is his long-term perspective. He advises investors to think decades, not months. He said, "Our favorite holding period is forever." By sticking with companies that have strong fundamentals, even through challenging times, you give your investments the best chance to grow. Challenges aren't always about market downturns. They can also be personal or business-related. Buffett's company, Berkshire Hathaway, faced a significant challenge when they bought a textile company in the 1960s that ultimately lost money. But instead of quitting, Buffett pivoted and used the cash flow to invest in more profitable businesses. Today, Berkshire Hathaway is one of the most valuable companies in the world. So, when you face challenges in investing, don't back down. Instead, look for the hidden opportunities that can lead to success. Every obstacle is a chance to learn, grow, and find the next big opportunity, just like Buffett did. Don't forget to subscribe and hit the bell icon to get more strategies from the world of value investing. Keep learning, stay patient, and start building your wealth today.